Nice to see all of you here. All right, we're going to get started in just a moment here, but thank you to everybody who has joined. It's lovely to see some of you and to see all of your names. Thank you for taking the time to join us. Welcome. I think we have a few more people coming in from the waiting room here, and we will go ahead and get started in just a moment. Excellent. Welcome. Fantastic. Okay. So I think we have a good number of people here with us. So we'll go ahead and get started. Just welcome everybody again. We're really thrilled to have you all here today to learn more about Social Accountability International and the Center for Sustainable Organizations and our Triple Bottom Line certification. This is the world's first Triple Bottom Line certification program, and we're really looking forward to sharing more about the certification with you all today. So with that, we'll go ahead and get started. To kick off our time together, we'll do some quick introductions to Social Accountability International and the Center for Sustainable Organizations. We'll cover who we are and what the TBL certification program is. We will then provide you with a technical overview of the Triple Bottom Line accounting standard and dive a bit deeper into the why behind this exciting new standard and how it is especially relevant in the changing regulatory environment. We will also share with you some opportunities on how you can get involved in this work. And of course, we will save some time for questions and answers at the end of this session as well. If you aren't already muted, I would kindly ask that you please mute yourselves for now. But of course, if you find that you have any questions that come up during today's presentation, please feel free to save them for a dedicated question and answer session at the end of our presentation today, or you can enter them right here in the chat function, and we'll go ahead and address them when we get to the Q&A. So please don't hesitate to use that chat function to make sure that we're capturing any questions or comments that you might have. Moving into introductions, many of you may know Social Accountability International, or SAI, but for those of you who are less familiar with us, SAI is a human rights, labor rights NGO, which is focused on advancing human rights at workplaces. We are driven by our vision of a world where workers, businesses, and communities can all thrive together. This vision underpins all of our work, which ranges from our SA 8000 standard, which I know many of you in the virtual room here today are familiar with. But outside of this standard, SAI also works on a number of different initiatives. So we facilitate a number of public-private partnerships under a variety of projects. We participate in many multi-stakeholder projects related to human rights issues, labor rights issues. We also offer a number of training and capacity building opportunities. And we work with brands, retailers, licensors, licensees, vendors, and suppliers, many of you who are in the digital room with us today, to develop and implement credible CSR programs throughout their supply chains. So that's SAI. Mark, would you like to tell us a little bit more about the Center for Sustainable Organizations?
Indeed. Thank you, Hannah. This is Mark McElroy. I'm the founding director of the Center for Sustainable Organizations, or CSO. We also are a nonprofit NGO founded in 2004, in our case, with the intent of addressing what we felt were perceived or shortcomings in sustainability and non-financial accounting at the time, which are still, much of which is still very much with us today. We are perhaps best known as the birthplace, if you will, of context-based sustainability, or CBS, and also the related economic doctrine or concept called multi-capitalism, and more recently have been credited with the compilation anyway and partial development ourselves of what we'll be referring to as the generally accepted integrated accounting or Gaia principles. Some highlights of our work over the years include partnering with many organizations, of course, to help pilot, test, and evaluate the use of CBS in their own operations, and also context-based metrics. And all of that is very much, of course, triple bottom line in scope. For the past 4 years, we've also been working as a special advisor with the United Nations on development of their Sustainable Development Performance Indicators, or SDPI. We're a co-author of the recent sort of groundbreaking report, which you see pictured to the left, entitled Authentic Sustainability Assessment, just published this past November. Very important piece of work that absolutely plays into this program. And last but not least, of course, we've been collaborating very closely with SAI since 2019 to help develop this certified TBL organization program. Go ahead, Hannah. So let's just start with a basic initial definition of what this program is. I think the most important thing to understand about it is that it is, first of all, a company level credential that focuses on helping to establish and operationalize a TBL, triple bottom line accounting function within organizations. So it's very analogous as a company level credential to, say, SA 8000, another SAI certification program, or for those of you that are familiar with the Benefit Corporation or B Corp standard, is similar in that regard, in the sense that it's a certification that applies to whole companies or whole organizations. Next, it very importantly goes beyond reporting. There's certainly, all of the attention in the room, so to speak, for the past several years around sustainability and non-financial accounting has been around the issue of reporting. But this program takes up the question of triple bottom line accounting more broadly, and also the question of what the organizational unit inside organizations should be in terms of where the responsibility resides for doing it. And that's what we're referring to as the TBL, or triple bottom line accounting function. And so a standard or guidance is required for all of that, and that's really what has inspired this program. Now, we are also taking the opportunity to include, as part of the standard, world-class practices, best practices in terms of how triple bottom line accounting can and should be done. And in particular, of course, we're relying very heavily on context-based sustainability as an accounting methodology, and also, as I mentioned earlier, the generally accepted integrated accounting or Gaia principles, which we have ourselves had a hand in compiling and co-developing. Go ahead, Hannah. Our initial definition of triple bottom line accounting would not be complete if we did not also provide some insight into how the term is being defined in sort of more technical terms itself. And what you're seeing here is kind of us laying our cards on the table, if you will, insofar as the multiple capital orientation to the subject is concerned. And so when we talk about assessing the environmental bottom line of an organization, by this interpretation, what we would necessarily have to be doing is assessing its impacts on natural capitals. And by the same token, when we talk about the social bottom line, we would necessarily be talking about impacts on human capital, social and relationship capital, and constructed capital. And then for the economic bottom line in the middle, it would be all about assessing the impacts of an organization on various economic capitals. So this is part of the thinking that goes into how we will be talking about operationalizing triple bottom line accounting. But I would also be remiss if I didn't point out that when this concept was first introduced, at least in this triple bottom line terminology in around 1994, I think, by John Elkington, not only did John explain and introduce triple bottom line thinking in a sort of a purely metaphorical sense, but John was also careful to, and can be credited with having been the first one to really associate these capitals, multiple capitals, with the concept of a triple bottom line. So there's been a very sort of long tradition in this regard, and we ourselves, because we believe in it, have taken it up as well. Go ahead, Hannah.
Thank you, Mark. And just to kind of ground us in what the certification actually means or looks like practically, just wanted to spend a moment talking about the certification process for the triple bottom line certification itself. So we rely on a multi-phase certification approach, where certification is actually issued after the completion of 4 key phases, which you can see here. There are 4 primary phases. The first is an initial assessment and initial introductory trainings, which we offer. So the introductory training and baseline assessment is followed by a series of customized trainings, then performance improvement, of course, performance assessment. And then at that point, certification level is then determined and ideally issued. So this is just the multi-phase approach. So as we get into more of the technical overview, we just wanted to kind of ground us in what the certification process actually looks like. So back over to you, Mark.
Okay, great. Thank you. Now, at the heart of this program is what we're referring to as the triple bottom line accounting standard. So any concept or any intent of certifying organizations in any field really needs to begin with an understanding of what the underlying standard of performance is, or the standard against which certification will take place. And so we'll spend a few minutes now on trying to summarize the content of the TBL accounting standard for this particular program. Go ahead, Hannah. So again, the first thing I want to make clear is that this is not just another sustainability or non-financial reporting standard or framework. And in fact, not only are we taking a broader view of triple bottom line accounting, but we also feel that in doing so, it's important to focus on, number one, conceptualizing the concept in broader terms accordingly. And then in particular, as well, as we talk about how to sort of build this into the fabric of an organization, if you will, we also need to address what it might mean to institutionalize triple bottom line accounting and how to operationalize it. And then lastly, what we're calling vulcanizing, or simply strengthening triple bottom line in, if you like, modern day terms. There are a number of world-class standards for triple bottom line accounting that really can and should be taken account of as we attempt to do these other things, operationalize and institutionalize the concept in organizations. But above all, the concept here is that there is not just an opportunity, but a need to really build triple bottom line accounting into, as I say, the fabric of organizations by treating it as a core business function in a very formal sense that is embedded within the organization alongside other support functions that most of us are already very familiar with and in a sense take for granted, particularly in large organizations where there would always be a finance function with a CFO. There's always a procurement function. There's a human resources function. There's IT and so forth. These are things that just are sort of, taken for granted, as I said, in terms of how we organize and operationalize businesses and other organizations today. Go ahead, Hannah. So let's take those four things: conceptualize, institutionalize, operationalize, and vulcanize, and let's break them down in a little more detail. Well, first, with conceptualizing triple bottom line as a concept, first of all, we want to declare our commitment to best practices in terms of things that I've already mentioned, which number one are context-based sustainability in terms of the accounting methodology itself that should be regarded as best practices or world-class in triple bottom line accounting. Some aspects of which are also already called for and acknowledged in some of the reporting standards, which are much narrower in scope, but nevertheless, the Global Reporting Initiative for many years now has been calling for reporting in context-based terms, and also the new European standard for sustainability reporting, which will be finalized and rolled out sometime this summer, also has aspects or elements within it that also call for context-based measurement and reporting. And then also this construct that we refer to as generally accepted integrated accounting, or Gaia principles, a screenshot of which you will see immediately to the right, which consists of 12 really very important fundamental integrated accounting principles that must be recognized and adhered to in triple bottom line accounting in order for such accounting to be authentic, if you will, and all of which is also and has been recently further advocated by the United Nations itself in this report shown to the right, again, the Authentic Sustainability Assessment Report, which we strongly encourage all of you to take a look at. And the other thing shown on the right is a cover from a text called the Multi-Capital Scorecard, which provides a very emblematic example or illustration of how these integrated accounting, context-based integrated accounting principles and practices can be operationalized, which we include as one of the standard materials in the training that we provide in this program. Go ahead, Hannah. Next is the issue of institutionalizing triple bottom line accounting as a core support function. And so in this diagram, to help illustrate that concept, we're using a graphic consisting of Michael Porter's value chain, showing how triple bottom line accounting, number one, tends to be missing from the sort of standard conception of an organizational value chain, but also how it could potentially be, if not should be, added back in. And whether you are a subscriber to Porter's value chain in particular, or any other conception of how best to organize an organization, in particular commercial or for-profit organizations, the point nevertheless remains that in most cases, triple bottom line accounting as a formal business function tends to be missing. And that's one of the things this program is designed to address. Go ahead, Hannah. Next comes the issue of how do we operationalize triple bottom line accounting. So once we've got it sort of baked into the value chain, then what do we do? How do we actually operationalize or endow this new business function with tools, methods, and metrics, and job descriptions and management systems and so forth? And so one very sort of fruitful way to look at this is to think about the triple bottom line accounting function in terms of a life cycle, where what's going on inside the box, if you will, inside the TBL accounting function are things like planning for triple bottom line accounting, measuring the triple bottom line performance of different components within the enterprise value chain, taking actions of various kinds within the TBL accounting function. Again, then working with business units to assess their own triple bottom line performances, and then also working with business units and on behalf of the organization as a whole to report performance in those terms. And so all of that you can think of as being also very analogous to the kinds of things and the kinds of activities that are already happening in other business functions, including in the finance function, which is also positioned as a support function to the business side of the house, the enterprise value chain side of the house, and is working in much the same way with the various business units within the organization to do the same kinds of things, albeit more narrowly focused on financial performance and not triple bottom line performance as we have defined it here. And so we see a very similar kind of relationship going on between triple bottom line accounting as a concept and the rest of the organization. But all of that needs to be specified in a kind of an executable blueprint form, with guidance included for how to do it and to back it up. And that's again part of what in our conception of this standard it brings to the table. Go ahead, Hannah. And then finally, what we're calling vulcanizing or strengthening triple bottom line accounting. Not only do we need to kind of broaden the scope and understanding of what triple bottom line accounting is, so that it is not just about reporting, but includes all of these other things. But we really need to provide new or additional guidance in terms of how to operationalize that. And I think to really help kind of dramatize the degree of need for this, it is I think useful to just sort of stand back and reflect for a moment, as I said earlier, on all of what is really happening in the sustainability and non-financial accounting world today, and in fact over the past 20 years or so, in that it has mainly all been about reporting, as if all of these other things that really have to happen and have to be done well before reporting itself can be meaningful. Nonetheless, if you look at the leading standards that we've been dealing with over the years and that are forthcoming, as I say, later this year, and the historical ones include the Global Reporting Initiative, the IIRC, which was all about integrated reporting, and the standard for which has now been subsumed or absorbed into the new IFRS standard, which will also be released later this year for sustainability related, that's their term, reporting. And then also finally the ESRS standard, which is the European standard for sustainability reporting that I mentioned earlier. If there's one thing about these four standards in particular that you might notice when you look at their acronyms is that they all include the letter R, which stands for reporting. Well, what about M for measurement? At what point do we establish standards for how to measure performance as a precursor to reporting? And the fact that these standards have either been fairly ad hoc or largely dismissive of the need to focus on reporting, or excuse me, on measurement, perhaps explains why they are all so different and inconsistent in terms of how they prescribe reporting itself in terms of how it should be done, even though they are all, at least at some level, conceptually committed to reporting sustainability performance. But generally speaking, it's all by different standards. So we think, therefore, it's important that that not only do we address reporting and triple bottom line accounting, but we need to address triple bottom line accounting in its entirety, and not just a piece of it, much less the downstream reporting piece. And so that's what we've tried to do in this standard by bringing cutting edge, context-based and Gaia principles explicitly into play. Now, here's a view of what it might mean to institutionalize triple bottom line accounting within the framework, the organizational framework of an organization, and also in a way that formalizes it. So this is not just something that some other already established group that is really there for some other purpose does in its spare time when it comes time, for example, to develop and publish a sustainability report once a year. No, this would be a permanent and formal management system and support function that would be explicitly built into the structure of an organization that is there for no other reason than to address the triple bottom line accounting needs of the organization day in and day out, just like the other fundamental support functions are. Now, the vision that we have in mind would not necessarily have to look exactly like this, but you get the point, nevertheless, that we're talking about an explicit implementation of triple bottom line accounting within the framework in a way that gives it the recognition that it deserves. Organizations are having triple bottom line impacts in the world, whether they are formally organized to account for those impacts or not. And so better to be formally organized to account for those impacts than not to be. And so what you see here is indicative of the particular vision that we have attended to in the TBL accounting standard that we've developed, and including description of the various functions within the triple bottom line accounting life cycle itself, what the responsibilities of a chief sustainability officer might be, whether that particular job title is used or not, and also what the underlying sub-functions, roles and responsibilities and job descriptions might be within the TBL accounting function itself, using titles like sustainability accountant, triple bottom line analyst and so forth. So this is just a kind of a top level illustration of what it might mean to implement TBL accounting within the formal structure of an organization. Go ahead, Hannah. And then lastly, just to further emphasize the level of formality that we have tried to give to this subject in our development of the TBL accounting standard is to point out the extent to which we've tried to correlate it with what the ISO standards refer to as management system standards. The TBL accounting standard is very much organized in the same way. And so the ISO interpretation of what a formal management system standard should consist of is certainly something that we took into account, just as we have also turned to other authoritative sources for inspiration and content when it comes to TBL accounting as a specific discipline. And so what you're seeing on the left is sort of the result of that. And so if you were to look at the TBL accounting standard, you would see that it is in fact structured in terms that, number one, are consistent with the ISO interpretation of what a management system standard is and how it should be structured, but which also reflects best practices and world-class standards in terms of how to do triple bottom line accounting itself. And so those sections include leadership and staffing, planning, support, operations, performance evaluation, and improvement. In other words, these are basic functions that any management system or any core business function ought to have in order to be really robust and ready for action, if you will. In the operations section, this is where we have built in particular, the best practices in the area of TBL accounting itself. And so those of you that are already familiar with triple bottom line accounting will very much recognize these issues: materiality. How do we determine what the focus and content of a TBL accounting program in an organization should be? Target setting, measurement, of course. How do we actually measure triple bottom line performance? Analysis, and then last but not least, reporting. And here again, you see reporting sort of put in its proper context, where clearly reporting is important, but it's not the only thing that triple bottom line accounting needs to be focusing on. All right. Back to you, Hannah.
Thank you, Mark. That was a really helpful overview. And many of you might be asking yourselves, why triple bottom line and why now? So we wanted to spend just a few minutes discussing those questions together with our remaining time today. So as you all know, the number of companies reporting out on CSR and sustainability initiatives has grown significantly over the past decade. And today, over 90% of S&P 500 companies include disclosures on sustainability issues and also publish dedicated reports on the subject. But even for these companies that are already reporting on sustainability and other non-financial issues, there's a real need for increased accountability, clarity, credibility, and reporting standardization. 71% of investors report that they're just not confident in the quality of sustainability reporting as it stands. And they say that the most significant challenges in sustainability reporting are the inconsistency, incomparability, and lack of alignment between reports. McKinsey found that investors also harbor doubts about corporate sustainability disclosures because few of them undergo third-party audits. So nearly all of the investors that McKinsey surveyed, which was about 97%, said that sustainability disclosures should be audited in some way, and 67% said that sustainability audits should be as rigorous as financial audits. So companies that don't adopt sufficiently transparent and consistent practices when it comes to non-financial accounting and reporting will face economic and regulatory downsides. And with a staggering 94% of consumers being more likely to be loyal to a brand when it commits to full transparency, it's clear that companies will need to really accurately address the consumer and investor desire for clearer reporting and accounting of non-financial activities and increased transparency as well. And as Mark previously mentioned, in many ways, the regulatory landscape has evolved and is still evolving to really accurately address the consumer and investor desire for clearer accounting and reporting standards, for increased due diligence, as well as increased transparency. And this is just a sample of the growing demand for due diligence when it comes to non-financial issues, performance, and disclosures. And as Mark mentioned, there are more on the way. With this has also come a shifting perspective on due diligence expectations. So the UNGPs are a widely accepted international framework that clearly state that corporate actors have a responsibility to respect human rights in their supply chains, even if governments, fail to do so. So they're really the international normative framework that guides companies in their efforts to operate with respect for universal human rights. And so we think about this in terms of due diligence activities outside of financial performance. And UNGPs also have this framework, the cause, contribute, and link to framework, which helps corporate actors determine what to do when they're directly causing an adverse impact, merely contributing to an adverse impact, and then when they're simply linked to an adverse impact. But this framework outlines that there is, a varying level of responsibilities in each of these scenarios. And this framework really gives us the ability to understand and determine that responsibility in a very concrete way in this ever-changing and evolving environment. So as a result of the changing environment and landscape, when we think about due diligence and non-financial performance and duties, the triple bottom line certification becomes even more valuable. So as Mark mentioned previously, there are currently no standards that really address how to best institutionalize and operationalize triple bottom line accounting. And at the moment, current efforts really focus solely on those reporting outputs. But the changing regulatory environments and shifting perspectives on due diligence are adding pressure to corporate actors who are facing increasing reporting requirements, increasing market demands for risk, triple bottom line, or ESG reporting. And most measurement and reporting tools as they stand are simply not enough. We really need to shift, as Mark mentioned, to this context-based approach that also emphasizes internal resourcing, internal infrastructure, internal operations in the form of dedicated, integrated accounting teams. And this is where we see triple bottom line certification really coming into play. And as mentioned previously, many of you know SAI best probably for our SA 1000 standard, which provides a framework for organizations of all types, of any industry and in any location, to conduct business in a way that's fair and decent for workers and to really demonstrate their adherence to the highest social standards. It was created by SAI in 1997 and has led the industry for over 20 years as the leading social certification. And SA 8000 applies a management systems approach to social performance and really emphasizes continual improvement, not this checklist style approach to auditing. And so SAI's role in this program is to really leverage this management systems approach across all of our work that we bring to our trainings, to corporate programs, custom engagements. But it's this philosophy that we're bringing to the TBL certification program as well. We're really here to leverage our expertise in management systems, in trainings, worker engagement, stakeholder engagement, assessments, and in policy development, and really bring that to the TBL certification program. So we now wanted to shift gears a little bit to how you can actually get involved in this program with us. And one way is to participate in a TBL pilot. The first step is to commit to the triple bottom line standard, then to measure your current operations through guided self-assessment with SAI and CSO. There will also be introductory trainings offered before moving on to the improvement phase, which consists of implementation activities and additional training opportunities. Once completed, there's an independent review period, after which the triple bottom line certification could be offered. And this cycle would just repeat continuously so as to allow your organization to continually improve upon the good work that you're doing. In addition to participating in a pilot, you're also welcome to schedule a call with our team to learn more about triple bottom line as a concept, the principles, the certification program. We'd also be happy to have you participate in a training introducing the triple bottom line principles and concepts to you and your team. So if any of these options are interesting to you, please feel free to email me. My email address is right here on the screen, hrcrane@sa-intl.org. But you can also put your email address into the chat here if you'd like. And that can just indicate your interest in learning more, and we'll be happy to follow up with you directly if that's easier. So thank you all for your time and attention so far today. It's really been a pleasure to connect with you and tell you a little bit more about this program that we're quite excited about. And at this point, we'd really like to open up the floor for a quick round of Q&A. So as we mentioned, kind of at the top of our call today, please feel free to unmute to ask any questions that you have or to put them into the chat and we can kind of read aloud from there. I see a number of questions in the chat already, so let me scroll up and see where the best place for us to start would be. So I think the first question, Mark, is from Marissa. Great to see you, Marissa. Thank you for attending. And Marissa asks, can you describe what non-financial factors are in the economic bottom line? Would factors considered in social and environment not constitute non-financial economic impacts?
Would factors considered in social, yes, factors considered in social and environmental areas of impact would constitute non-financial, could constitute non-financial economic impacts. I'll give you an example. A simple example might be workplace safety, where or other, if you will, aspects of workers' rights that are arguably addressed by the SA 8000 standard, separate SAI standard, are economic in the sense that they address aspects of the economic system in which people are working and in which people are employed, and might involve things like human rights and workplace safety and other resources that people rely on in the workplace for their well-being. And so, strictly speaking, those things might, in terms of how they are fundamentally defined, might be non-economic in the sense that they deal with impacts on human capital and physical capital, like workplace safety and so forth. But they do so in an economic context and therefore comprise non-financial areas of impact that could be viewed as being part of the economic environment overall.
Mark.
Yeah.
Moving on to the next question, we have a number of them in the chat here, so thank you to everybody who has asked a question. So Bill says, I deeply appreciate the need to establish the foundations of certifying the structures and processes that TBL organizational certification brings to the table for the first time. Of course, many of us are eager for the certification or verification of TBL performance results. It may be premature, but it would be helpful to know if CSO and SAI anticipate the possibility of next level assessment of performance in a future program built on this triple bottom line organization certification program.
Yeah, I think Bill makes a really important distinction, and thank you, Bill, for this question, because it's not a point that we've addressed yet, but will now. Makes a very important distinction between let's just say the quality of a TBL accounting function as opposed to the actual TBL performance of an organization. So there's a difference between saying the TBL accounting function is well designed and is using all of the best practices and is the best it can be, not to be confused with a different statement that might be made regarding the organization's actual TBL performance. And so it's possible that the quality of a triple bottom line accounting function could be, world class, the best it could be in an organization whose actual TBL performance is itself, poor. So at this point in time, this program is not focusing on TBL performance per se at all, and instead is focusing only on the criteria for establishing well-defined, world-class, robust TBL accounting functions. And, again, in a similar kind of analogous case, you could think of this, make this point in, say, purely financial terms. Imagine a company that is experiencing financial losses day in and day out, despite the fact that their finance function and their accounting practices are best in class. The one, in a sense, has, I wouldn't say nothing to do with the other, but they are different issues and can be, conceived differently. So in the spirit of first things first, we are simply taking the position that, look, how can we expect organizations whose triple bottom line performance these days might be less than what we'd like them to be, if the same organizations do not even have triple bottom line accounting functions in place? How can we possibly expect organizations to effectively manage their triple bottom line performance if they do not yet even have measurement and reporting functions in place that make it possible for them to see and understand what their own performance is? So that has to be the first priority, at least at this juncture in time, and that is really what this program was inspired to do.
Thanks, Mark. We have another question from Pamela in the chat. Pamela writes, you mentioned this standard as a company level credential. Do you see the responsibility with the board of directors to make sure TBL is integrated into the corporate structure?
Yes, and emphatically yes. And not only do we see it that way and feel that way, it is explicitly written that way in the TBL accounting standard, where the relationship between the TBL accounting function that we describe and the board or governance function is explicitly addressed, just as it is for the relationship between the TBL accounting function and top management. Not to mention the relationship between the TBL accounting function and other managers of business units who, if you like, are users of the TBL accounting function. All of that needs to be spelled out and is spelled out quite explicitly in the TBL accounting standard. And that's all part of the concept of how do we operationalize TBL accounting. And insofar as the board or the governance function is concerned, we have also included the concept of what we refer to as a TBL accounting charter. So this is a statement by the board of what the focus of the TBL accounting function should be, not just in general technical terms, in terms of what the role is that it should play in the organization, but also in terms of what the triple bottom line standards of performance should be for the organization itself from one period of time to another. And so this is where the issue of materiality comes rushing into play in this conception of triple bottom line accounting, where the TBL accounting charter that is expressed by the board will make it clear that the expectation, the standard of performance for the organization in terms of its triple bottom line performance, to sort of get back to the question that Bill raised, should not only go beyond financial results, but and should not only include treatment of the social and environmental impacts and performance of the organization, but what specific social and environmental areas of impact in particular need to be addressed by the TBL accounting function in its measurements, in its own measurements of performance for specific periods of time. And so the content and focus of that charter is something that would then need to be refreshed and updated on a year-over-year basis. So great question. There's a very important role for the board and or governance function to play in all of this. And yes, the TBL accounting standard that we've developed does address it very explicitly.
Thank you, Mark. I'm keeping my eye on the time here, and I'm going to combine two questions that we've received, which have gotten some additional kind of support in the chat, if that's okay. So Sleal asks us, what would be the incentive for a company to be TBL certified as opposed to other, like leveraging other frameworks? How do we see TBL work in tandem with these other frameworks? And we received a similar related question about thinking about existing frameworks, existing standards, and could we provide a little bit more insight as to why we think that TBL accounting isn't explicitly embedded in those frameworks? So hopefully combining these questions makes sense.
Yeah, well done, Hannah. I think that is a great question, and in some respects, it's the most kind of fundamental question of, you know, what does this program bring to the table that isn't already there, and why do we need it? And I think first of all, there is the difference, the distinction that I made between the scope of this standard and program versus, you know, 99% of everything else that's happening out there, which tends to be concentrated mainly on reporting and disclosure. Not that there's anything wrong with reporting and disclosure. Of course, we need that. But then the question is, you know, how do organizations get there from here, and how how can reporting and disclosure be meaningful if we haven't first determined how to measure performance in the first instance? And the fact is that that most of the standards that we're talking about and faced with using today have not done that. And it is demonstrably the case that what I think now is unquestionably regarded as best practices in terms of how to measure integrated performance and sustainability performance in particular is utterly missing from most of the international reporting standards, or else is included in a couple that I mentioned by reference. The Global Reporting Initiative for 20 years has been calling for the application of context-based principles in triple bottom line reporting, but has not yet provided guidance for how to actually do it. Well, we do, and so do others now, including the United Nations in its Sustainable Development Performance Indicators report that was published, as I said, in November. But also, in addition to the lack of guidance for how to implement world-class measurement as a precursor to reporting, there is also the separate question of, hey, wait a second, who's supposed to be doing this measurement and reporting at all? I mean, where would we have, or who would we have be doing this inside organizations? For goodness sake, that function, there are no standards yet for how to actually operationalize the function itself as a unit of the organization that includes, people whose positions are identified and described and so forth. And so it's the absence of the organizational unit that we call triple bottom line accounting that can also be perceived as a barrier to even the effective implementation of the more narrowly focused reporting standards. And so what's really needed here is a standard for how to operationalize the function itself, and also better guidance for how to do measurement as a precursor to reporting. And then beyond that, nothing that we are proposing in this standard or this program would in any way conflict with what is separately already being called for in the reporting standards, and in fact would easily meet, if not exceed them in most cases.
Thanks, Mark. So Sleo, Connor, Rosario, Morley, Mark, does that answer your questions? Are there any kind of lingering questions that you have? I just want to invite you to come off mute, if you have clarifying or additional questions, just with our remaining time together. Or you can put anything into the chat. Yes,
hi, Mark and Hannah. I just wanted to say thank you so much for this session. Thank you for responding to all the questions. I'm kind of a huge fan of all of the work that you do. I'm a master's student studying this space. So I just wanted to say thank you for the work that you do. I studied Mark's PhD thesis, the 2008 Social Footprints PhD thesis last semester. And I'm working on doing my master's dissertation in context-based reporting and trying to integrate that as a methodology for my dissertation. So just wanted to share that you have a big fan in me in all the work that you do. And sorry to take up time on the chat.
No. Thank you. Thank you for your kind words and for being with us today. We really appreciate it.
Thanks.
Thank you, Connor. I know we have just a minute here. We did get a couple more comments here. Oh, Bill says that, Mark, your PhD dissertation is required reading.
I would agree. I would agree.
Thank you, everyone, for the kind words here. We do have one question, which, for those of you who need to jump off, I realize we're at time. So before I ask this additional question, thank you, everyone, for attending. Please do stay in touch. Please reach out to us if you have additional questions. Any questions that we didn't get to, we'll try in the next minute or two to kind of address. But if you need to jump off, thank you for joining us today. We appreciate your interest, your time, and your participation. So thank you all. And Mark, do you have 1 extra minute for one final question from the chat?
Bet. Yeah, you bet.
Great. So Umesh asks us, does this apply to brand retailers or factories or entire supply chain, this certification? And also asks, how TBL differs from existing certifications. Does it offer to kind of eliminate some of the audit or reporting fatigue for a company? So I think that 2-part question, if you don't mind, Mark, and then I will try to capture all other questions that are in the chat and connect with everyone via email with answers.
Okay, and remind me again of the first part, Hannah.
Does this apply to brands, retailers, factories, or entire supply chain?
Yeah, all of the above. I mean, it's if the application of financial performance accounting can be applied to any of those entities, then so can this. This is really no different. The point is that entities, whatever they may be, can and do have both financial and non-financial impacts in the world that call for assessments. And this is a program that's all about how do we operationalize business functions, tools, methods, and metrics that make that possible in a kind of world-class way.
Great. Thank you, Mark. And so we're getting a lot of comments in the chat here thanking us, but I'd like to once again thank all the attendees today. Thank you for your engagement, for your questions, and participation. And we look forward to staying in touch, as we mentioned. So Mark, I'll turn it over to you for any final closing comments, but just a resounding thank you for everyone who's attended.
Just a quick note to add my thanks as well. And, we are very much in a kind of recruiting mode for looking for additional organizations that are kind of conceptually committed to triple bottom line thinking and management to potentially join us for additional pilots. So by all means, be in touch with Hannah if that would be of any interest to you and the companies you work for.
Excellent. Well, thank you so much, Mark, and thank you everyone again for attending. We will be in touch with the slides from today's session, and we look forward to staying in touch. So thank you all again, and hopefully speak soon.
Thanks, everyone.